Dave White, and of course, we're back into the breach, dear friends, once again. And I was just saying, unfortunately, Skype decided to flip the inputs for some unknown reason. I think every few days when I'm gone, it just likes to do that. Anyway, as we start off the show today, as always, we're up just a little bit. Up a couple of points in the S&P cash. Not much happening. FOMC meeting notes were just out. My guess is we had these kind of foreshadowed. Don't see a lot different than what I was seeing before out here. And we'll just keep an eye on it. But to me, the thing that we want to be watching for is the dollar over the next hour or two. And, of course, the gold prices hovering around 12.22. And, of course, probably the big movement out here today is oil. Russia says it has no interest in dropping production, and that off almost 4% on crude prices. So we've got a lot of stuff going on. As always, we like to come to you at this time. Of course, nothing is going to work today for some unknown reason that I cannot tell why. But we will get that all set up. Okay. For some reason, everything in its dog has decided to not work today. I guess it's just being gone for so many times. Well, that doesn't work either. Wow. How weird is this? Well, we'll figure it out as time goes along. But what else can you say? Anyway, Fed minutes out. We'll see how the market reacts to it. I think it's kind of probably a little too close to call. Of course, we were at 24.33 as the high, so we're just 3 points off of it. But again, you're just not going to get a lot. We've got fund buying, so I'm not expecting the market to go down. But at the same time, the reaction is probably going to tell us a lot about what retail traders think. The last 30 minutes of the day is going to be much more interesting to us. As always, you can give me a call at 877-927-6648. Got some emails already, but we'll have to see. Now, the question is why I'm not getting any. Okay, that says I should see there. I should save that, and I should hit this, and I got nothing. So who knows? I'm going to have to sing history repeating today. It's all just a little bit of history repeating. On this day in 1810, Phileas Taylor Barnum, America's first marketing genius, is born in Bethel, Connecticut, to Philo and Irena Taylor Barnum. He later founds Barnum's American Museum, full of curiosities and freaks, brings singer Jenny Lind, who, if you could probably put together all the big names today, she was the really first big singer in America, classically trained. The Swedish Nightingale to the U.S. for the first great concert tour of America, creates a sensation with 25-inch tall dwarf General Tom Thumb, buys a Jumbo the elephant, and gives the English language a new synonym for big, and in 1970 creates what becomes the Barnum and Bailey Circus. He never, however, says there's a sucker born every minute. He said something close to it, but not quite that. And, of course, the big circus deal was down here, just south of here in Sarasota, and closed a few months ago, last show.
Then it's all just a little bit of history repeating.
It is this history repeating. I'll try to figure out why nothing's working here today, but you never know. That's about it for the news. Let's go ahead and start getting into charts out here, which got a lot of stuff that we're looking at already. You can always give me a call at 877-927-6648. And what else do we have? I think that's about it. You can email me at path@tfnn.com or put a message in the den. Why aren't more children named Phineas? I don't know. It's like Poindexter. Has anybody actually met a Poindexter? Has there actually ever been someone named Poindexter? I know that there's the guy that sang Hot, 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 but his real name was Poindexter. Dexter Poindexter. But you never know. Anyway, as I said, we're going to watch this kind of closely. We're bouncing around pretty much unchanged before the Fed minute notes. But I thought that a lot of what gold was doing was based on that, and crude to some amount, and that is them taking out $500 billion out of the QE. The details are going to be buried, I suspect, in part of what we saw. I just haven't had a chance to read it yet since it just came out. My guess is that everybody's going to be pouring through that in the next hour or so. We're probably going to see some kind of movement, I would say, before the end of the day. Probably going to see it in crude and gold, and probably, with the S&P being fund buying, and probably today a lot of fund buying coming in, my guess is fund buying is going to be over by tomorrow. So we're probably, when you talk about as good as it gets, probably sometime between close today and close tomorrow, the most amount of money is going to be pushed into this market. And of course, we've got a few things going on out here. As I said, I wanted to get into charts fairly early today for a day after a long weekend. Kind of one of these things where just wonder. But anyway, nice day setting up out here, but I think we're probably fairly close to looking at the whites of their eyes again, where there's a chance to pull the trigger and go short. We'll be back after this.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
There is a sucker born every minute. Each time that second hand sweeps through the top.
Well, I checked everything during the break, and it's all hooked up correctly, and nothing's coming out. So I may have to reboot the computer after the show today. Maybe that will fix it. Anyway, I had some good questions, and I wrote about it in the newsletter this morning. And everybody's talking about the flash crash Monday, which didn't happen. All those, from what I've read, all those were erroneous prices sent out by a company called CSI that delivers tick data to Yahoo and Google and the rest of them. It never really happened. And I don't know if they fed it back or other people got it, but from my understanding, none of those trades went off and no one lost any money. At least that's what I read this morning. There is a thing, and I think this is what happened. Yes, it's fake news. I wrote about it this morning, but you kind of have to go back in history to figure out what's going on a lot of times with data feeds, especially on something like a Monday when there's not much volume going on. There are companies and they resell data feeds. It's very hard to copyright streams of data, i.e. like stock prices. And if you actually took the data out of the newspaper and typed it in yourself, legally, there's nothing that they can do about it. They say that they own that data, and for the most part, the New York Stock Exchange or NASDAQ will sue you anyway because they have a lot of money coming in, and unless you have a lot of money coming in, they'll just run you broke. It has nothing to do with what's true. There was a famous court case settled just, I think, 10 years ago on baseball data. The baseball people didn't want to look horrible, so they kind of gave up on it. But the stock market has continued to kind of say that we own all this data, the data's ours, and we're going to charge huge amounts of money for it. Back in the early 1920s, there was a famous court case, and the court case was all about a town that didn't exist. Map makers, there were several of them, it was a big business because there were no government roads. Every road had a different name depending on which map maker made it. You'd come to a Y in the road, and there would be signs from 4 or 5 different map makers all nailed to the tree pointing this way or that way and the name of the road that they'd given it. So it was a huge mess. But even then, it was very expensive to go out and make maps. So what they would do is they would put fake towns on their map. They're called paper towns. And this actually was like a big deal. And Rand McNally got caught with her hands in the cookie jar for this little town in New York that theoretically didn't exist. Rand McNally was very lucky because someone saw this new map from the other company and lived right there and changed the name of their convenience store the same day that the map came out. So they get to court, and basically Rand McNally goes, here's a real town. It's named after this convenience store is named after it, and we just put it on the map. So they kind of got away scot-free. But the idea of putting in little curves and roads and hooks and false names and towns on maps has existed for a long time. My thought is this happens so regularly that it's not a mistake, that a lot of these companies that turn around and sell the data to other places like websites, like Yahoo and Google, Microsoft, and the rest. Normally, there's 2 or 3 companies. CSI comes to mind, I think is the biggest one. And most of the time, I see the data is all the same. If it's wrong on one, it's wrong on the other. So it comes from CSI that way. The interesting thing, is this thing a fake town where they want to show up where people use their data, not on their website, so they can sue them? I think that's probably the most likely thing. And I think sometimes it just gets away from them, kind of like when the Rand McNally got sued and the town actually becomes a town, not because it was a town, but because somebody else put the name there. And you kind of get that almost a feedback loop in it. But I suspect that all the stuff that happened on Monday was a result of the second-tier data makers. From what I read and looked, I never saw in my data feed any of the huge price swings in Apple and Amazon. I'm trying to remember the other one that was in. But I went back through them. The volume was wrong. I had to go back and sort that volume out for my own personal data feed that I have, my own database. That showed up completely wrong. So I went back through it, but I only found 3 or 4 stocks that they were wrong in. But my guess is that was one of those paper town issues where they just put in fake data and probably were looking at other websites to see if the fake data showed up on theirs, i.e., if I'm running my website, do I just copy data from another website and put it on my website and don't pay anybody? So why I'm not 100% accurate on it, I did read 3 articles this morning. All of them said that none of those prices were right and none of those things got executed. So I don't know for a fact. I kind of had taken off already, so I didn't see it. But I think that's it. Yes, that is a question. Should we be able to demand a cut since my trade actually went through and they're selling my data? Unfortunately, when you sign all those documents, when you start to trade, it says that all that is theirs. You've already given away your son. You've written it all away. It's like those little EULAs when you click yes, yes, yes when you're installing some software on a PC. Who knows what you've given away? It's hard to tell. But yeah, Microsoft, NVIDIA, Apple, Amazon, I think there was a handful of them. Anyway, I went through them last night and cleaned them up just to make sure that they were real and validated them with a couple of different feeds just to make sure. But yeah, there's that whole paper town thing. I've always wondered, especially if you were in that business, how easy would it be just to kind of make the old honest mistake and profit from it? Is there a collusion in the second-tier data firms? I've always wondered about that. It happens a whole lot less. This was kind of a regular occurrence back in the early 2000s. In fact, it was not uncommon to see prices vastly differ from what Yahoo was reporting and what the market had. And I always kind of thought that there was some hijinks going on, but you never know. Anyway, we'll look at some of those later. So what do we have going on here? Enter the national, see a few of my emails. But hopefully that explains it. I think that is what's going on. Okay, what else do we have out here? Okay. This is going to disturb me. That answer everybody's question? I hope it does. If you have some more, just give me a call. But there's actually a movie that came out called Paper Towns. It's not a documentary. It's actually some young love story thing by the same guy that did The Fault in Our Stars. I don't think it did well last year. But that movie is a little bit about somebody that goes to a quote paper town, one that doesn't exist. It's interesting. We'll look at chart.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Will interest rates continue to rise? For bold trades on U.S. Treasuries, now may be time to take a closer look. Trade TMF or TMV. Directions daily, 20-plus year, bull and bear, 3 times ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And a question on the dollar. I don't have a chart for it right here, but as far as I can tell, it's a football for the Treasury Department, and they're trying to use it more than anything else right now to control the economy. My guess is that they had a big hand in pushing the dollar down as we went into kind of a soft patch across the summer, and they're hoping that the soft dollar will help a lot of the Dow stocks that are more in the traditional non-tech sector and help exports, because that, I think, is the weakest part right now of the market, not the tech sector itself, which basically went into a bubble, which is kind of burst out here. We'll look at a few of these stocks today. But we do have, the dollar's kind of going to go where the Treasury wants to push it. And I don't know if you can do much about it. Eventually, the market will will out. But in the short term, I suspect the Treasury has all the tools in the world to keep the dollar in this range, probably below 100. But I suspect other nations will probably get in on the act itself, and we'll probably see more competitive devaluation as we go along. I was thinking that maybe gold would have the biggest move off the Fed numbers. Not that much. The gold's still up $1 at 12.20, but not setting the world on fire. Crude's still lower, just above $45. So not much to say out here. Now, we did have some big gap downs, and I'm going to say this qualifies as the third gap down for AutoZone. You had, if you've just been listening to the show recently, you can email me at path@tfnn.com, and I'll give you a link to my little white paper on 3 gap plays. But basically, if you have 3 big gaps down with a volume, and I mean, these are big gaps, not these tiny little things, but these big ones. And the first one happened on the 23rd of January. The next one came in here on the 23rd of May. And now we've gotten the third one out here for AutoZone. This may be a very interesting washout. Again, when you come off this, it's not instantly V bottom. A lot of the times, especially if the market's pulling back. But if this can probably hold around the $500 area for a while, this may be an interesting long in a market that's starting to pull back, and auto sales may be pulling back also. So keep an eye on that. But 1, 2, 3. In fact, let's do this. I didn't want to do that. I wanted to do this. There we go. Zoom in on this so you can see what I'm looking at. And we'll go to the little stampies here. So that's the first gap right there. That's the second gap. And that's the third gap right there. Oh, don't you love that? I love Snag It. It's so great for these kind of things. Anyway, 1, 2, 3. You look for big volume and a large gap down. And that's the third one. So you probably would be looking for some kind of long-term buy in this now if it can base out. Now, you want the market turning back up. That may even take to the end of the summer. But, well, we're in July. It's almost over, isn't it? If you're a kid going on vacation for the summer, I think you probably think the summer's almost over. But, 6 weeks, 8 weeks, something from like now, this may be one of the better buys out here. It's going to take some consolidation. When you buy these 3 gap plays to the downside, they're not big Vs, but sometimes they are. Sometimes they're just washouts. So keep an eye on that. Okay, talked about the dollar, gold weekly report. Okay, anything else? Looking for a place to buy Microsoft, MSFT. The first place that I was looking for Microsoft, got to cure that. All those horrible quotes in there. Got it. Okay. Okay. So this $65 or $66.50 level is the first level of support. So you got a little bit more to go at here. But $66.50 is in this gap up that goes back to the 24th of April. And that's the first part I would look at. You did have a lighter volume test of June 12th. But I still suspect that over the summer, we're going to drift back down to $66.50 on Microsoft. That's where I would be a looker on that. What else? Okay, got a couple of emails. We'll get to those later. Let's get to the ones now. Anyway, we talked about AutoZone. It's 3 gap play lower. I think that this is probably going to find some support around 500. Baidu in the news today, they're basically putting together a giant consortium on self-driving cars. And I think they got, 20 or 50? Can't remember the news from this morning. I'll have to spend some time and read it tonight. But basically, they got everybody, Ford, General Motors, everybody to line up against Tesla. And, of course, I was just talking to somebody yesterday down on the beach, and they thought, one of these kind of people that wanted to put solar cells all over the house, doesn't eat meat, vegetarian, wants a hydroponic garden in their backyard. I think you're starting to get the idea. Basically, they were telling me how Tesla was unbeatable, and I thought, well, maybe that's a good reason to short them right there. I told them the problems I thought I had with the company, and that is the margins that these guys have probably will not be able to be held for very long. And I think you're probably already seeing that now with all these companies. Volvo also came out with news that they're only going to make hybrids and straight electric cars starting in 2019. So Tesla's not going to be the only game in town. My guess is that there's going to be a much better answer than lithium-ion batteries, which also comes up in our discussion today on one of the stocks. In fact, that's SQM. China is trying to cut everybody off at the pass for lithium, and basically been making discussions with chemical and mining of Chile of kind of wrapping up a monopoly on lithium for those lithium-ion batteries. That popped fairly decently today, about $1.50. So you can look at that. But then we go back to Tesla itself. It was downgraded. I think everybody knows that the writing's on the wall. We talked about this actually breaking below the 3x3 and setting up a move. We're basically back there. 327, which is the May 2nd high, is kind of where support comes in. So we're only about $4 higher than what we saw today. Now you've got huge volume off the top. What you want this to do is, I want to see a big short squeeze in Tesla, and then pull the trigger on this thing once those the weak-handed shorts are out of this. But I'd like to see this thing bounce to like 365, maybe over 360. See a lot of the weak-handed shorts get out of it, and an opportunity to short this. As I said, a couple years down the line, I think this is a $40 stock. The I-Omega of 2017 will be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay. Anyway, we're looking at Tesla, like I said, hugely short stock. Let me move a few things around here. I have not looked in the last couple of days how big that changed. Let's take a look here. Where is that at? Oh, there it is. Had to find everything. Okay. So I want to look at TSLA. Okay. Well, actually, it had a very light day, just 22% shorts on Monday. And a lot of times these stocks fall as soon as everybody gives up shorting them. So it was a short day anyway, so I don't know if a lot of people wanted to go that. It looks like short interest has actually been falling for about 2 weeks, which is normally what happens. Eventually, when the shorts give up, the stock finally cracks on these bubble stocks. What else do we have? Got a couple of emails. We'll get to them. Buffalo Wild Wings downgraded today. We've talked about this one for a while because it's one of these trade what you know things. I've been talking about this one for forever and the cost of going to these places. It is kind of broken down through previous levels now. In fact, let's go a little longer out here. This one was downgraded. Not a lot of volume today in this, but you've got a low at 122.25. That's the April 27th low of 2016. 4.2 million shares. Volume fairly light so far today, about 300,000 shares. But you're going to go through that 122.25. It's summertime. It's always kind of weak in the summer. But I've wondered how you can get a filet at Texas Roadhouse or whatever for the same price that 12 wings, some celery, and blue cheese cost without any beer. And it's always been a little tough to me how these guys are going to exist. You can go to Logan's Roadhouse too, or I think that's the one I go to. It just seemed to me an awful expensive place to go where you can see sports at some of these other ones, Chili's, a lot of the other places, and get a lot more for your buck. I just think that they eventually raised the prices to where it, the Wing House is one. Anyway, Buffalo Wild Wing getting down to its low. It may actually find something out here for that April 27th low of last year. A lot of discussion on mall stocks. This one has turned south again. The numbers were out for June, and retail traffic was down almost 8% at the malls. So none of these mall owners like CBL and Associates are doing fairly well. GGP, that's G as in George, G as in George, P as in Paul, the same thing. You're going to see these mall retailers looking like they're headed back down to their previous low of May 1st. On GGP, that's $21.05. KIM is another one of these mall owners, strip mall owners. They're all looking pretty much like the same thing, which is they're going to go retest the lows. June 6, 1675 on KIM. KRG, I think, is another one of these, all in this same sector. Kite Realty Group, This one's closing back by below the 3x3. The $17 level looks like it's going to be support. Energy wasn't enough off the top, but anytime you see 8% drop in one single month for retailers, that is problematic. Upgrade in LNG. If you're unfamiliar with this company, they liquefy natural gas. They're doing it kind of a different way out here. I think the news on this one, if I'm not mistaken, was that they got a ship now doing it, but doesn't seem to do them any good today. Down and back, look like it's going to go through its low June 15th, which is $45.69. No love for natural gas for the most part on the week in the summer. MAC. This is another company that owns strip malls and parts of regular malls. Again, down fairly strong. 56.06 is the June 6th low in that one. Micron came out and defended themselves today. A little bit better. Monday, there were a lot of rumors that they had production problems. They officially denied it today, and it's up a bit, kind of putting a little bit of juice in the stocks and some of these, at least in the tech sector, but not up on a lot of volume when you consider that we closed on one compared to the volume down on Monday. NVRO, again, you can call me at 877-927-6648. We can get to that. Navarro, I'm trying to remember the news on this one. Can't remember it now. Down on May 9th, did so on 6 million shares, up and into that gap with 1.6 million shares. So there's some of these things that are probably setting up what looks like a ABC. So we can look at this one as an ABC. Look at it here just a second. Pretty nice retracement. This one's retraced exactly 50%. If you thought that this thing was going to continue on with a ABC down, this is about as good as you get. It does exactly what I like, which is fill about half of the downside gap. And normally these things will go sideways for a couple of days. So I'm not saying pull the trigger right now, especially with fund buying for the next couple of days. But not a bad looking chart out here for an ABC down. This would give you a 1-to-1 at $49.16. Let me look at the profile on this one again. What's the name of this thing? NVRO. Medical device. Yeah, it had some kind of medical news out here. Chronic pain in the United States. Spinal cord stimulation. They had some kind of medical news anyway. Nice pop out here. But if you're looking just straightly as a pattern, this is exactly what you're looking for. Go right halfway to the gap down. Do so with significantly lighter volume. Play around for the couple of days. And as soon as this thing goes below the 3x3, look at shorting it. You may even get that in the next couple of days. O'Reilly Auto Parts, another one that would get the loser horn if I could play the loser horn today. Huge volume down. And, of course, you've got what else? I don't know what else you can say. These things cracked. They cracked big. Let's go back a little bit farther. Can I? There we go. Wow. This is going back through some. We'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're up almost 4 points on the S&P cash volume, 2.2 billion shares on the NYSE consolidated tape, which is I wouldn't say surprising coming after a weekend. We're probably going to have a lot of volume coming into the close, so it should probably pick up. We do have some fun buying. That can conceivably go through tomorrow's close. There's no law that beats these guys about the head and shoulders if they don't buy, but I'm just not expecting that much. I think we're probably in this range. This is at the kind of the far extreme range, which is 2433 on the S&P cash. Maybe we get a little bit more out of it. But I just don't think that there's that much in the well for fun buying. But they will hold the price up and give those 401k folks the absolutely top price that they can get. No need to give a sucker an even break, referring to Barnum and Bailey earlier. So we'll look at that. We've got John. We play this game every once in a while. Where in the world is John Logan? Well, he's going to be here in the next hour, so make sure you hang on for that. Let's see if there's anything else out here. Gold is flailing around up $2. Crude down $2. Don't think we can say a great deal about that. Anyway, we're talking about O'Reilly. These things have broken through. Now, if I will go back, there was this one actually does have another gap down here at about 160. I think that you could, on this one, you could see this one go down another $13 back into that 160 range. So again, as I said on AutoZone, you'd probably give these things a kind of a wide berth for the rest of the summer. but don't be surprised if these things consolidate out just a little lower and set up for maybe a nice buy come September. But it's going to take a little while to do that. SPG, did we get to this one? I don't think we did already. Simon Property Group for the malls. Did I do this one already? Yes. Okay. Down fairly long volume. This is the big Mac Daddy in this group. 150.15 is the June 5th low. 1.6 million shares that day. You got 1.7 today. So I'm going to say that the first chance of these things bottoming out is probably a test of that June 5th low. So we don't have a lot there. Wanted to see how some of these other ones had done. IBM had done nothing but go sideways for a while. And this is just continuing going sideways. This one has had one big gap, had kind of another big gap. I'm looking for the last big gap out here to set up maybe the end of a 3-gap play. That would probably set up a maybe 143, maybe 140 area for IBM. That might be interesting. How much time do we have here left? Okay. I will be doing a webinar come the 19th of this month. I don't think we've started advertising it. It will be about trading companies that are in the field of machine learning. Of course, IBM, kind of a big one with Watson. We'll talk about that. We'll talk about Microsoft, Salesforce, all the companies involved in that. So start thinking about it, because this will be about trading those companies that are in machine learning. And then a month later, it's going to be using machine learning to trade. So I've got a big summertime, lots of things going on for you. In the meantime, sow when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.